Greetings everyone, this is Kuhan Vinayagasundaram, Chief Investment Officer and Portfolio Manager of 𝗙𝗾 Equity Fund, one of Sri Lanka's oldest equity unit trusts. This is the year-end update for 2025. Before we begin, let's go through some particulars of the fund. As of 31st December 2025, the AUM of the fund stood at 565.2 million Sri Lankan rupees with an NAV per unit of 66.13. The equity exposure of the fund stood at 92.2% and the fund had investments in 21 portfolio companies. In terms of the performance for the month ended December, the fund generated 0.9%, outperforming the ASPI by 131 basis points. For the 3 months ended December, the fund generated 5.6% with an active return of 174 basis points over the ASPI. On a full year basis, the fund generated 50.4%, outperforming the ASPI by 850 basis points. On a longer term basis, the fund has grown at a compound annual growth rate of 31.8% over the past 5 years, outperforming the ASPI's 27.3% during the same period. In terms of monthly performance, the fund has generated positive returns in 10 of the 12 months of 2025 and has been on a winning streak since March 2025. This monthly performance matrix should be viewed in context of a relatively volatile period for stocks in 2025, both locally and globally. In terms of portfolio companies' performance for the quarter ended September, 81% of portfolio companies reported year-on-year earnings growth. That is, 17 of the 21 companies grew earnings. On a weighted average basis, this translates to 31% year-on-year growth in earnings for our portfolio companies, which was backed by a healthy 27% year-on-year top-line growth. In terms of leaders and laggards, Windforce PLC, ACL Cables, Access Engineering, Dialog, and 𝗘𝗾𝘂𝗶 were the key contributors to fund performance during the last 3 months, outperforming the ASPI's return. Windforce continued to benefit from key project-related announcements with new projects in both solar and wind space, while ACL and AEL continue to benefit from strong momentum in construction activity, evidenced through improved readings on construction PMI, as well as a broadly positive national budget for 2026 with high allocation towards public spending on infrastructure developments, which could benefit some of these counters. In terms of the laggards, it was Alis Fabric, Ahun Glass, People's Leasing and Finance, and Prime Land Residencies, which contributed negatively to the fund's performance over the past 3 months. MGT continued to suffer from a slower order backlog given the impact of tariffs that were imposed by the US administration back in April. However, the other names which contributed negatively in the last quarter were quite strong performers in the year-to-date basis, and the companies were largely consolidating some of those gains in the fourth quarter. Looking ahead into 2026, the first quarter has generally been a relatively weak quarter for equities in Sri Lanka. The average return for January has been 3.1%, followed by a bit of price consolidation in February and March with negative returns of 3.4% and 4.9% before the index finds its way in April and continues to grind higher into the year end. And 2026, the first 3 weeks has been quite positive, where we've seen the SPI track above 5% and has had a very strong start to the year. However, we feel that given the recent price movement and with the index trading at an all-time high, we could potentially see some price consolidation in February and March. In terms of key things that we are watching, on the 28th of January, we have both the US Fed as well as Central Bank of Sri Lanka meeting for their monetary policy decision. The US Fed, we do not expect any further easing in the first half of 2026. It's a year of transition for the US Fed with leadership changes expected in the second half. We do believe that there will be further easing from the US Fed in the second half of the year once the leadership change does take place. But however, in the first half, we expect the Fed to continue to be on hold. From the Central Bank of Sri Lanka's point of view, we expect the central bank to continue their accommodative monetary policy stance, supportive of growth. However, we do not expect them to ease policy rates further in the immediate near term, given that the growth continues to track quite strong, with private sector credit growth also expanding at more than 20% on a year-on-year basis. However, the central bank does have space to cut rates if required, and especially if the growth weakens because of the impact of the cyclone 𝗙𝗂. But however, our base case is no further easing by the Central Bank of Sri Lanka, at least in the first half of this year. In terms of further things that we are looking at, there is an ongoing IMF staff visit between the 22nd and 28th of January. This is largely to assess the impact of cyclone 𝗙𝗂, and this could also be a meeting which could set targets for 2026 and estimations given the impact of cyclone 𝗙𝗂. So we are looking at that quite closely. And during January and February, we'll also see the companies reporting the December quarter earnings. And finally, this could develop into an external shock is the escalation or the ongoing escalation in tensions between the US and the EU over Greenland and associated tariffs and its impact on key commodity prices and the US dollar. And that's something that we are watching very closely as well. Talking about shocks and volatility, this is a table that kind of shows recent shocks that we've endured in the market over the past 5 years, and how each of these waterfall declines, which we term as declines that happen quite abruptly within a short span of time, each of these waterfall declines in a situation or a backdrop where there are the structural drivers, the market continues to remain intact, have resulted in some great buying opportunities. Taking 𝗙𝗂 floods as a recent example, where the index saw a decline of 5% within a span of 7 days. However, it took less than 40 days for the index to recover to previous all-time highs. And looking at some of the previous instances of external shocks like US tariffs, we've seen very strong 3-month and 6-month returns coming off the bottoms of such waterfall declines, which happened within a short span of time because of a shock event. And to conclude, for those who are new, the 𝗙𝗂 Equity Fund aims to generate alpha over its benchmark with a medium to long-term investment horizon through active stock selection and cycle positioning. It aims to provide its unit holders positive risk-adjusted returns whilst limiting downside risk through prudent risk management practices. Our investment strategy, termed the Quintuple Foundation, focuses on 5 quality-oriented factors. These factors are namely sustainable earnings and free cash flow growth, healthy margins and ROEs, market leadership in terms of product differentiation or price leadership, which allows companies to sustain their margin profiles over the foreseeable future. Management qualities, we believe that companies with able, nimble and agile and ethical management teams are capable of creating shareholder value. And finally, valuation is a key pillar of our investment decision-making process. We do buy growth companies, but we ensure that the growth names that we buy come at reasonable valuations. That's it for this update. I look forward to talking to you all soon, and all the very best for 2026.